Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the weekly wrap. Today, we're going to look at gold and silver, and let's get right out to price action because that's what's important. Silver is rocking and rolling. We hit the $100 threshold, which was something that I talked a lot about over the past 6 weeks. There's no two ways about it. I mean, we absolutely crushed this trade. There was one trader in here that I spoke with, right in the beginning of December that had actually gone long. And it looked very, very tasty in the silver markets at about $25, $30, and you're at $100 now. So I've got to actually sit back and reflect and see what this means, because clearly there is a demand for silver. Clearly there's a built-in demand for silver. There's AI that's needed as a conductor. It's a store of wealth. It's all these different things. But we have to really step back and say, okay, what is going on in the metals markets? What is going on with silver? We all understand gold. Gold's not hard. Gold's a safe haven. When all else fails, buy and hold gold. We know that. We know that the richest people in the world have done that for a long time. We know that is that 10,000 years of recorded human history. Gold is the go-to. But the real question here is silver and what exactly is happening. A fourfold increase in just a little over a year is absolutely huge. The yearly chart says it all, but I wanted to pull this daily chart because you're up 5% again. 5%, 5%, 5%, 5%. And it's just ridiculous. It really is absolutely ridiculous. We'll get in the way back machine here a couple weeks ago. I keep pulling this chart up because I get a lot of questions about it. But to be honest with you, it just is what it is. I don't want to beat a dead horse. I really don't. But we really do have to understand that in a market that was already bullish, something like this cup with handle, is just one of those trades that a lot of folks made, and they did fairly well doing it. Terrible handle. But right there, that's exactly what we're talking about. That's a pattern. High, pullback, high, compression break. And now you're all the way up to the top side target at $100. If you got in on this ride, great job, crushed it. Take me out to dinner. It's absolutely fantastic. I really like the way that this is developed. And now what do we do? You can't really sell it. You're at 1016. The biggest thing that I can always say and that I say to everybody is there are no rules. There are no rules on how high this market can go. There are no rules. And you need to understand that, because there's people out there that are going to try to pick the top of this market. And there's people out there that are going to lose everything that they have and then some. And I'm going to tell you a horror story here in a second about gold, about a client. It's a real story. I'm not going to mention any names. If you're watching it out here, don't worry, you'll be completely anonymous. But what happened was absolutely unbelievable, and I definitely want to cover it, and it plays into our Friday psychology. So we've got to talk about that. But right now for silver, key level, clearly 100. You had a little bit of a check up here and then a pullback. You probably could have got a real tight scalp there, but we didn't recommend that at all. I warned you about 100. I said, I don't know. But in any case, right there is the compression. So you maybe could have got a little bit of money on it, but was it worth it? I don't know. This is an incredibly high-risk trade. Maybe a pullback right from 100. That's right down there around your 62% Fibonacci on an intraday basis. You probably could justify taking a bid from there, and you're probably going to be okay. But to say that silver is bullish is absolutely the understatement of the century. No question about it. Pullback buys, yeah. A couple of things we're going to talk about with our psychology going into the weekend open, and then I'm going to tell you a horror story, and it caught me by surprise. I cannot believe it. So welcome everybody back to the trading room. We got a lot of new faces, a lot of familiar faces out there in YouTube land. Praful, good to see you, Praful. Tina Jing, good afternoon. Good afternoon, Tina. 26% increase in silver. Yeah, it is the 10,000-pound elephant in the room. There's no question about it. Let me see. Jason, happy Friday, Shane. Happy Friday, Jason. Good to see you. Some people said Chinese silver market. Well, there was some orders given. It was one of those things where for the longest time, the idea the Chinese government would promote, buying and holding metals, and now they're sort of saying, hey, you need to put your metals in the market because there's a serious shortage of silver. There's no question about it. And right now, it just feels like the institutional shorting that's gone on in the metals markets for years and years and years is over. 100, and I know we're sort of late to the party, but we were calling this trade out for the last several months. Bullish, 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 bullish. And it's not because really for any other reason that we've watched each one of these big round numbers just get absolutely freight trained by the metals markets. And, to me, the read was relatively simple. Once we broke up over 40 for silver, I said, okay, 40 and 50, there's no rules on how high we can go. Is there any reason for somebody to sell silver right now at 101, at 102, at 105, at 110, at 125? To me, it's all funny money at this point. We've got to see a fundamental change in probably the global dynamic and also the silver sentiment itself before anything happens that would even constitute taking a short. That's absolutely imperative that we understand. There are no rules on how high this market can go. There's no rules. We were sort of poo-pooing $125 not too long ago. I was like, I don't know about that. It looks like it's going to happen. This looks like it's going to happen maybe next week. So the momentum's all on the bulls. The bidders are coming in. Institutions bought at 100, it looks like to me. And that right now is going to be our downside level of support. We're going to be scalping that 100 level to the top side. And if we get it later today, that'd be fantastic. But these are short-term trades. We're not picking a direction. I want everybody to really realize that. Okay, good to see you, Tuku. Welcome, Andrea Garwell. Hi, Shane. Great Friday gold trade. Fantastic, Andrea. Great to hear. Bobby Bob, good to see you, Bobby. Lita, welcome. Let me see. MD, love you from Bangladesh. Well, welcome from Bangladesh. Absolutely fantastic. Let me see. Treg Trader for silver, Yeah, well, there you go. But I missed your first message, Treg. Be sure to get it in. We could be cutting out. We've had issues with the servers and Cloudflare and everything over the past several months. It's just been on and off. So if I missed your message, I'll be sure to rewrite it. I will be sure to answer. Let me see. Marcine. Hi, Shane. I closed my silver today at 140. Long since 28th August, all thanks to you. That's what I like to hear, Marcine. I have to tell you that the discipline You were long from late in August. We won't talk dollar amounts, but it's significant. That was a significant gain for you. To be in a position where you had the discipline to hold on to that trade until it hit 100, I have to tell you, if you can make trades like that, you have a lot going for you. You have a lot of discipline. You have the ability to buy and hold these things. For me, if I would have bought in late August, man, that thing would have hit like $60. I'd have been gone. $70, 75, I'd have been gone. I would have taken my money and probably went to the islands for a few weeks and thought about my next move. But I have to say, my hat is off. I have a hat around here somewhere. My hat's off. You had the discipline to hold for 100, and I just love to hear things like that. The story I'm going to tell you is sort of the opposite of that here in a second. And it's not personal experience. It's one that I heard, but it is local to the trading community. And we just got to go over it because it's Friday and it's important. There's a very important lesson that we're going to jam home today. It's very important. Let me see. Tina, good to see you. Tina, welcome. My TP, my take profit of gold was too modest and got hit when I was out yesterday. Yeah. Man, timing these markets with this much volatility is very, very difficult, Tina. So don't kick yourself. Let's get back to work. Let's find some trades and find some levels. Trade update. Let's go ahead and start with the Sell America trade. The Sell America trade is on. 5,000's up next for gold, and it really is. I mean, we just hit 100 in silver, and here we go. Here's your 5,000 level in gold. This is it. This is the game for me. I'm watching very closely. Our key level is right around 49,992. I love it. I love it up there. I think it's going to be fantastic. I want everybody to understand the difference between silver and gold. Gold's a much bigger market, much more volume in gold. Right now, there's a ton of volume in silver. Don't get me wrong. But gold is the big daddy. It's the big dog. It's the one that everybody's really watching, and they're getting involved in. A matter of fact, it's so big that your volume numbers, volume data doesn't dispense data for the symbol. So volumes are big for gold. They're very, very large. So when we're looking at 5,000, it's absolutely imperative that we understand what's happening. And I want to show you something that's very important that we get. Spot gold right now is trading at 49.77. Now take a look at gold futures. Gold futures for the February contract are trading right around 49.79. This is fascinating. Why? Typically, they're way up. They're way ahead, especially with gold. Those gold markets have been pricing. Those deferred months have been at a premium. So when I see something like this, I say, okay, gold futures are what? 49.78. What's spot gold? Spot gold's 49.77. What's going on? Well, one thing is we're coming up on rollover. We're not too far away from this contract expiring. It's 5,000. That should be your number one hint right now, that 5,000 is going to be a big deal. I look at the futures contract and I go, okay, high's 49.89. Interesting. Spot gold, high 49.88. Typically futures contracts operate in one of two ways. They either have backwardation or contango. Now, forget those terms because they're just, honestly, they're for economists and they're for people that are up on the metals and they want to believe they're smart. So they'll walk around and go, well, the contango situation, the backwardation, you don't need to know any of that. What you need to know is this. Typically, we've seen big spreads, significant spreads between spot and futures pricing for whatever reason. Typically, it was big. It was really large when we were working with the December gold contract. It was big. And the reason why was everybody thought gold was going up. A lot of it geopolitical uncertainty, dovish dollar, all of these factors, right? Now it's tightening up. Why is it tightening up? Because the world does not know what to do with gold at 5,000. They do not know. Now, silver's a different animal. Why is silver different? Because of that gold-silver ratio I've been going on and on and on about. We made a YouTube video basically nobody watched, and it's a shame because the gold-silver ratio is absolutely imperative that you get it, that you understand that, okay, that spread between the gold price and the silver price is coming in. Right now, we're at about, 49? We were at 50 yesterday, maybe a little bit less than that, 48. That was at 100 not too long ago. So what we're seeing is a complete reprice of the entire asset class. And right now, 5,000, that's the big dog in gold. Nobody knows what to do with it. We should be trading over 5,000 in the futures contract compared to spot, and we're not. A lot of folks call the difference between, well, agricultural traders call the difference between the futures contract and the spot market the basis. That's the basis. You don't see too much basis pricing in the metals markets. Typically, we just go with either spot or the futures. But like my crop size and ag products like wheat, corn, live cattle, feeder cattle, lean hogs, things like that, there's always a pretty significant difference between those front month contracts and spot price. And that basis, that difference is called basis. Well, our basis right now in the gold market's very, very tight. And typically, it's been very, very large. What does that tell us? It tells us that the war will be fought at 5,000. This thing's setting up exactly like we thought it would. Right now, I'm just sitting on an entry, 49,992 sells. I believe that it's a relatively strong play. Now, here's the caveat, and here's what we have to talk about. Right now, we're printing 49.80. It's Friday. It is Friday. If you get 49.92, and we're looking for about a $15 pullback and a payoff on this, if you get that, under no circumstances can you hold that position to the short over the weekend. And I'm deathly serious right now. You cannot do that. If you're a big trader, if you're George Soros, if you're Warren Buffett, if you're Jamie Dimon, if you're Donald Trump, fine, hold your shorts over the weekend. I don't think any of you guys are on the live stream. If you are, big shout out. Congratulations on your success. For the rest of us, for me, for you, for everybody watching this stream right now, you don't have enough money to take that short position and hold it. Now, the reason why is what we call systemic risk or systematic risk. When you go home against a trend as strong as gold, there's a very good chance that you're going to see the market open on Sunday. If things go any which way but loose, meaning if there's a surprise and we're getting surprised, 10 times a day, Trump's on TV every hour, it seems like. Anything can happen right now. You could easily see a gap up. You could easily see an open up here at 5,250 or 5.25, something like that. You do not know. You do not know. If you do that, and you're short, if you're short from right up here where we're talking about our key levels, somewhere right around that 49.90 area, and let's say you open up right up here at 5,025, you're on the hook for that difference. If you don't have enough money in your account, you're going to get the number one, the position's going to be liquidated, and then your broker's going to call you for money. And if you don't, you can't come up with the money to cover that loss, you're probably going to wind up in a courtroom. Now, if you're a big trader, the broker will probably work for you and say, okay, you got a couple weeks or a week, just get us the money when you can because they want your business if you're a multi-millionaire. But if you're a retail trader, and let's say you have a $5,000 trading account or a $10,000 trading account, and you take that short, and let's say that short is a legitimate position, not too bad. Your leverage you can manage it with your 10 grand. And then you show up and you say, okay, 5,000, okay, gold open at 5,025. Well, I didn't think it was going above 5,000. Well, you're not wrong, but that opening price, you're on the hook for that. That position's going to be liquidated. They're going to do the math at your per pip value, and they're going to say, okay, this thing opened 2,000 pips higher. We want our money, and we want it now. Well, I don't have it. Okay, then we're going to go to work on you, and then the legal system goes to work on you. Then you're talking bankruptcies, you're talking selling houses, cars, you're talking about liquidating everything. You don't want to ever be in that position ever. Okay, now I'm very serious about this because I heard a story the other day, and this is no kidding, and this is something that happened to a trader. This person was trading significant size, and they were trading the gold market. They went home short, and it wasn't too long ago, about a week ago, something like that. So we were looking, what was last Friday? Would have been the 16th, right? Yeah, 16th, something like that. So it would have been somewhere right in here, 16th. And then you could see right there, sort of there. This chart's not showing it, but your close was at 45.96, and then your open was at 45.96. So that's not necessarily accurate. In any case, the market opened gap up. It might not have been last week. It might have been a couple weeks ago. It's in here somewhere. The market opened gap up. They were short. They're instantly on the hook for 40K. Ouch. I don't care if you've got $250,000 to trade with. You open gap up on a Monday and you're down $40,000. You're in big trouble. You're in big trouble. Let that be a lesson to everybody listening and everybody watching. Now, if you're the person that happened to, I feel your pain. I've never personally done that because I don't hold anything over the weekend, but I understand why you would do something like that. You liked your trade. You thought it had a great chance to win, so you executed. I honestly don't even have a problem with your leverage. If you're trading big, you're trading big. God bless you. Go get them. It's called setting the apple. That's great. Go for it. I'm aggressive. Believe me, I'm as aggressive as anybody in this room when it comes to when I like something, I pile the size on and I don't apologize if I lose. That's part of being a trader, and all of you will get there at some point. So if you made that mistake, don't make it again. Don't make it again. So no matter how much I love this zone right here, this is an intraday trade. We're looking to get this entry somewhere right up around that 92 to 95 level, whatever you're comfortable with. I'm not going to tell you exactly what to do. Our key level's 92. But right up in there, no matter how much I love it, I'm not going short and holding this over the weekend. If you do that, I'll wish you the best of luck. Understand what can happen to you. That's the last thing I'm going to say about it. I like being happy. I don't like giving those types of talks, but it is absolutely imperative you guys understand that and grasp that. If you don't do anything else, you've got to learn that. You don't hold those things over the weekend like that. Now, if you're doing it with incredibly small leverage, maybe you could justify it, but you just remember, like I told you in silver, there are no rules. Silver could go to $200 an ounce by next Friday. There are no rules right now. Gold could open at $5,050. It's too risky. You can't do it. You just can't do it. All right. Last one I want to cover is copper, though. I saw a report earlier today that copper was going to be, I believe the gentleman said, you people don't understand. If you had any idea of what the world was coming to, you would be holding as much copper as you possibly could. And I said, well, that's interesting. I'm not holding much copper. I think I have right here. We're talking copper right here. I've got 1 ounce of copper. That's my 1 ounce of copper right there. So I've got an ounce of copper, and right now that's worth about $6. So, hey, we made a fortune right there buying copper at a gift shop. What we've got going here, though, is a significant day up, and you're looking at about 2.5%, and that all came on the heels of this gentleman's statement earlier today. I find it to be sort of, I don't know, not necessarily problematic for the markets. I just think it's all bullish. Right now we're betting conductors, we're betting AI, we're betting all of it for the year ahead. So in my opinion, you're going to see this big rally continue. I think copper's probably the laggard, if I had to guess. I mean, realistically, it's the one that's behind. This is the copper CFD. Let's go ahead to the monthly. And you'll see that you're way up. I mean, you're just absolutely way up from where we've ever been. That spike high back in July has just been annihilated. So we've already tested the waters above last year's high. All-time high is, 6.18. There's absolutely no question that we're going higher. We've got a little bit of compression right around 6. Everybody would probably say, okay, Shane, where's the top side targets at? And I would do exactly what we did with silver and gold, 750. What do you think the probable level for copper is going to be? 10. It's big and it's round. 750 and 10. Right now, you're having a little bit of problems getting up over 6. Maybe you get a pullback, maybe you don't. But right now, the questions around the copper supply are just as severe as the silver supply. The only thing about copper is that it is lagging. It is lagging silver dramatically, of course. But as far as what could we expect or how could we maybe trade copper, do you want to buy it right now at right around 6? I don't know that there's any reason to do that. I would just let this thing break up a little bit and then buy pullbacks. If you wanted to buy the market right now, though, buy and hold, it's not a bad trade location. I don't love it as much as I do silver because copper's always sort of been a little bit finicky with regards to, we just got a new mine comes online and everything. We know there's shortages. We know there's production issues with copper, just like there is silver. But from a really a practical standpoint or a pragmatic standpoint, do we want to buy it right now? What's the point? You're not on the uptrend of all. It's not like gold. It's not like silver. You are certainly on the march, but you're just barely trading above last year's highs. I would give this some time. There's going to be sellers in here somewhere. Maybe get a shot at 550. Maybe get a shot down there at 5. If you get one of those, that's not a bad way to do business. So I like copper. I'm bullish all metals pretty much. There's no real reason not to be. A lot of folks are going to watch this live stream and go, yeah, you're the last one of the party. And I go, go back and check out some of our past live streams. We've been bullish since that gold broke out of that bullish pennant last summer. And we've been bullish silver, like Marcin said, right around the end of August. So something to think about there. Okay, guys, we got some questions here that I will cover, and then whatever markets you'd like to look at. We've also got some pretty good stuff with regards to some psychology we have to talk about, and then we've also got a little bit of action there in the Japanese yen, and we're going to talk about the BOJ and what's happening. And then I'm going to introduce a new section to these live streams. I'm just going to call it Trump Watch, and we're going to do a news scan and see what he said today. All right, in any case, remember to switch on with our Switch Markets newsletter. I'll have that out to you in your email inbox by the Tuesday London Open. So if you're in London, if you're in the UK, the beautiful UK, you can definitely tune in and get that email address in there. Subscribe for free, and we'll get you loaded up with our weekly newsletter. We also put a video out each week on our YouTube channel, and that's our Switch On Hot Picks. You're going to want to check that out as well. I give you some analysis on the markets that are moving. We've been covering metals almost religiously the last several weeks, so I'm going to be I'll have my thinking hat on, and we're going to be looking at metals heavily in that newsletter. So it's going to be a lot like this live stream. So if you want to switch on and get started, go ahead and check it out. And we're going to be launching the Shane Explains series a little bit later down the line this year. I think it's going to be a lot of fun. I can't wait to do it. It was really a great idea by one of my colleagues, and I was like, yeah, let's do some Shane Explains. It looks good. Sounds good. It's spelled like my name is. So there you go. Okay, let's see. You got it, showing the GOAT. Yeah, I think you got it to 300. The GOAT is perfect. I mean, for Marcin, I mean, if you have the discipline to hold those positions through key level after key level, I mean, it just was a really sophisticated trade management. Things like that make me happy. So enjoy it, Marcin. Well done. Let me see. Nico, Shane, I have a question. Absolutely, Nico. Fire away. I trade the 4-hour chart primarily. How many pairs should I focus on? Well, if you're trading a 4-hour chart, you've got time. Here's what I would recommend. 4-hour chart, if you're trading Forex, you could probably do 4 or 5 pairs. You really could. Realistically, you have time to think. You're not going to have to make split-second decisions all the time. Now, a 4-hour chart is a true swing trading type of approach. So if that's what you're looking at doing, and I like the 4-hour chart on the Forex pairs, that's where the money is. For me, it takes all the noise out. The ranges are nice and juicy, and you have a chance really to get in there and trade it with a little bit of confidence. Now, but you are position trading. So you've got to know your economic calendar. You've got to know the market drivers. And you got to understand it's a swing trade. You're going to probably be in those 4-hour trades. I would say probably a minimum of 3 or 4 price bars, maybe 4 price bars, and that's going to be just under a day. So I think that more than likely you're going to be in those positions probably 2 or 3 days on average. So if that's the case, know your economic calendar, because that shakes up everything. Know your news cycle. The Trump news cycle shakes up everything. But I would take, if I was doing it personally and trading a 4-hour chart on the Forex exclusively, I would be focused on probably 3 or 4 pairs, and I would make sure that they didn't have any correlation. So I would run some correlation coefficients. Just go ahead and Google it. They've got machines out there that do it. And I would be trading things that aren't really correlated. So what I'm saying is I wouldn't trade just 4 majors. Because it's all predicated upon how the U.S. dollar is going to behave. The price action is going to be a little bit different, but what you want to make sure you do is you're not making the same trade 4 times. It's called Forex exposure. So what I would probably be doing is I'd say, okay, I'd be looking at, U.S. dollar here. Maybe we'll get some cross pairs. Maybe look at some euro cross pairs. Maybe look at some Great Britain pound crosses, and maybe throw an exotic in. The problem with the exotics, of course, is the spreads and the margin requirements almost make them a non-starter for a lot of people. But you could definitely be looking at 3 or 4 with a 4-hour chart. You could be looking at 3 or 4 pairs. Just make sure the correlation isn't there. We don't want to make the same bet over and over and over again. It's called quadruple exposure. You don't want that. You want to make sure that you just get nice isolated things. So one way that you could do it, Nico, is if you were going to diversify across the markets, you could say, okay, I'm going to trade one major. Maybe I'll look at an indices, and maybe I'll look at a commodity, and then maybe a cross. And that would give you 4 markets where you could potentially get into it. But that's tricky too, because the commodities a lot of times, and especially the indices, the U.S. indices, you're going to have to watch your time frame. A 4-hour chart for like a U.S. 30, nah, that's too big. You need to be focusing more on those more granular And you also have to focus on the best time of day, which is going to be that London-New York overlap, no question. All right, here we go. Bank of Japan. BOJ signals hikes in a hawkish tilt, warns of action against yield spike. Pretty dramatic headline from Reuters, isn't it? We talked a lot about this one. We talked a lot about the Bank of Japan yesterday. I took probably 10 minutes and broke it down for you and sort of told you what I thought. And it was, pretty good market read, I think. Pretty savvy market read. We talked about the Bank of Japan probably coming off as being hawkish. That's exactly what happened. The interest rate move itself wasn't really dramatic. I mean, it was right here. BOJ interest rate decision. They held rates firm right around 0.75%, which for the BOJ is incredibly hawkish. I mean, it is a positive interest rate. Japan is the home of the dirty float. Get negative as fast as you can, pump the system with yen, make those exports hyper competitive abroad, grow your domestic economy inside out via foreign investiture. That's the game plan. That's Abenomics. And cut regulations and let companies not operate with impunity, but give them more leeway on getting business going. That's Abenomics. We're no longer doing Abenomics. That's not happening anymore. BOJ holds rates firm at 0.75%. Okay, fantastic. That's just fine and dandy. And you can see right here, here's your 3-year, and you go from negative to positive. Boom, there's a bump, flat bump. So long story short, it's hawkish. What does hawkish policy do to the domestic currency? Makes it stronger. Right here, U.S. dollar, Japanese yen. Big time pullback right here. We steamed right through this 62%. You might have been able to get in there with a decent little scalp right here. Something like that. Nice sell-off a little bit earlier today. Boom, you hit. You got a little bit of a bounce. So if you were bidding down there right around 156.55 or something, you got a pretty good run right there, 156.91. So that was a pretty good scalp. It wasn't a bad scalp, but that's all it was because that level right there, 62% on that, I believe, what was that weekly chart? That's gone now. You don't want to take that again, even if you do get a daily close up above that, which I don't believe you're going to get. Right now, we are trending, and we're trending hard here, off almost 1.2% on the week, 1.27% on the week. That's a big move for a Forex pair. That's a significant move. So you got the dollar yen. We're crashing. What do we have down there? 13-period EMA, 155.58. Key level, 155.46, 78% retracement. This zone right here is exactly what we're looking for. That's exactly what we're looking for. 78% right there, 155.46, somewhere in that neighborhood, 155.50, 155.55. That zone is potentially a significant downside support area. I would be looking towards that as maybe an area to bid. But once again, you don't want to hold anything over the weekend, so that would be a scalp. So if we come off another 50 pips late day, you might be able to dig in there for maybe 10 or 12 pips. But right now, your spread's over 2 for the dollar yen. It's right at 2 and over 2. So maybe not the best trading in the world. Still, though, you got good volatility, and you may get that opportunity. Now, big picture. What do we want to do with regards to the yen in total? Potentially, this is a big deal. The shift in policy is what's going to be the catalyst for the Japanese yen, the dollar yen. We're looking to see a significant easing out of the U.S. dollar. I'm going to show you the DXY chart in a minute, but for right this second, what does that mean for the yen? Now, currency trading was easy. It really was easy. And believe me, this is a monthly chart, and I've been live through all of these months. All of these months we were here with bells on, right? This right back here in 2022, this run was significant. This run right here we talked a lot about at the time, and I said all you got to do is play against the yen, and you're in great shape. But you got the big correction here, and then once again off of this pullback, it was back to just play against the yen. Just bet against the yen, and you're going to be fine. And then you get a pullback here, and even then right in here, the same basic thing happened. It's been a little bit more difficult over the past, year or so? 18 months, it's been a little more difficult because this was a significant sell-off. You rally, you didn't make a new high, and now we're just sort of ranging around. So when I'm taking a good look at this monthly chart, I'm saying, all right, there's a couple of different scenarios that can happen. Number one, the change in policy might have put a lid on this market, and we maybe start talking about the yen making a serious run against the U.S. dollar. We know we're going to get big rate cuts out of the dollar. We know the yen, the BOJ, relatively hawkish with what they were saying. I mean, for them to hold rates firm is one thing, but to sort of signal that there's more what happened here? Well, we're not going to subscribe to anything. Right? Hawkish tilt, warms up action against yield spike. Basically, they're saying they could maybe raise interest rates again. Board revises growth forecast for fiscal 25 and 26. Hawkish member Takata proposes a rate hike turned down by the board. Governor Ueda says wage hikes leading to broader inflation. Yen slumps despite hawkish tone before jumping versus the U.S. dollar. So what does all that mean? It means that, number one, Japan is worried about inflation more than they're worried about economic growth. They say that the growth is okay. Growth forecasts have been revised up. They say higher wages, wage hikes, are going to lead to broader inflation. Okay, so what does all that mean? It means that your interest rates are probably going to stay where they're at. And in the United States, second half of this year, you're probably going to see some aggressive cuts. A lot going on here. Could this be the top of this market? Yeah, it could be. So for me, I'm no longer just saying play against the yen. I think that could be a really bad mistake right there. Those spike low, nice monthly spike low. And I think we've got a legitimate chance to test that level down here, maybe as early as in February. So we're looking at this trade, this area right down there, right around 152. You've got a 13-month EMA, which is present at 150, 150. This zone right down here, I mean, that's the juicy trade. That's the juicy one. Do we get it? I don't know. I mean, who knows? Are the fundamentals there? Yeah, they're there. They are there. Now, next week's Fed meeting is going to tell us a lot about it, a lot about what's going on in sort of the head of the Fed. But remember, that's going to be sort of a nothing burger. Jay Powell is going to be standoffish and combative. So it's going to be an interesting type of a meeting. I don't know that it's going to sway this pair too much to get us down to 152, but it feels to me like we're going to get there this year. So is it time to short the yen? You would need a big stop. You'd have to probably stop yourself out up above this month's high and take a position. That's sort of an institutional trade. If you do things like that, make sure your leverage is low. Don't let it clean you out. Still a little bit volatile. We don't really know the way forward 100% on the Fed. We think it's rate cuts, but we're not necessarily sure. That's really all there is to it. Interesting stuff, though, guys. Interesting stuff. Okay, let's see. We got some more questions. Nico, can you elaborate more on why you don't like the 4-hour or bigger time frame for US 30 or US 100 or commodities? Yeah, it's all about, let me preface, let's start with commodities. Gold and silver, yeah. 4-hour chart, those are 24-hour traded products. Typically, even during the dead times, those candles do have relevance. So I would say that you could get away with trading the 4-hour chart on gold and silver, although you're going to see a majority of your volumes really during that London U.S. session, that period of time, typically when the West starts trading. That's when you're going to get the most movement out of those markets. So that's crude oil. You should never use a 4-hour chart with crude oil. If you want to, and if you're making money, great. Pretty much, especially WTI, not all of your volume, but a great majority of your volume is going to occur during that U.S. session. So, if you're looking at something like a WTI chart, U.S. oil, for instance, and let's just go down to, say, a 30-minute chart, not a 45-minute chart, a 30-minute chart, you can see this is relatively consistent every day at about 8:30 Eastern, 9 o'clock Eastern typically is when the volume spikes, 9 a.m. Eastern, and that's really, that volume right there just destroys this volume back here. So you're going to want to make sure that you're trading these things during the most volatile times, especially if you're an intraday trader. If you're not, then I'd probably step back to a daily chart. Crude oil is definitely one of those, though, that your 4-hour chart is not going to help you a whole heck of a lot. As far as your gold and silver, though, that's doable. Your FX pairs 100% because they're traded around the clock on a 24-hour basis, and their ranges are smaller. There's not as much volatility. As far as the US 30 and the US 100, the game really is on in the United States. For that U.S. Open. So the same basic type of thing. Let's go and take a look at the U.S. 500 is a pretty good example. Right there, opening bell, ding, ding. There's your cash open, and you've got just elevated volumes. Now, you got significant volumes here, and that's the London Open. So if you wanted to maybe start your analysis right around the London Open through the U.S. Open for your U.S. indices, U.S. 30 and U.S. 100, yeah, I don't have a problem with that. Just understand when the periods of time are going to be elevated. It's going to be right in here. It's going to be during the U.S. session. So if you do put a 4-hour chart on, or a 4-hour time frame on, you're going to sort of encapsulate the entire U.S. session into what, 1 bar, 2 bars? Now, if you want to build a strategy that way, feel free. But our biggest goal is to make sure that, especially when we're day trading and we're scalping, that we're trading during peak participation, peak market depth. That's what you want to make sure of there, Nico. I hope that helps. Let me see. OG, set alerts at daily support and resistance on as many assets as possible. Stay in the know in this game. Yeah, I mean, there's nothing wrong with that either, OG. I mean, if you have a alert functionality and you've got one of these things, you can get alerts on your phone, and you just, when it comes to one of your key levels, you're sitting there, you know what to look for, and you place the trade. I mean, that's a sophisticated way to do business. I have no problem with that. I think that if you're going to be in front of these screens, though, I don't know that you want to go much more than 3 or 4 markets. But you've got a great point, OG. You do. You got a great point. And that's essentially, you would attack the markets in a broader sense just to try to get as many trades as you possibly could. And using longer time frames, you're absolutely right. You need to get as many trades as you can, especially on something like a 4-hour chart, because if you limit yourself to one market and you're sitting there looking at the euros all day and you don't get any setups, that's not a very good feeling by the end of the week. Ice Hazy. Hey, Shane, why was the Dow on a downward spiral today at the market open? It's a legitimate question. We had a few economic events that were out, nothing that should have moved the market. We had some S&P PMIs here. Let's go ahead and take a look at it. We'll look at the Dow here. US 30-minute chart. You can see exactly sort of what you have is sort of right there would be your 6 a.m. So that's 8 a.m. Eastern, about 90 minutes before. And then there's your real choppy open. So why was it on the open? Honestly, part of doing business. It's not the best answer, and I don't know 100%, but take a look at what we have. We have just an absolute sort of choppy whipsaw market. I know the Dow's off 365 points or so. It's only 0.75%. It's nothing. Remember, and a lot of people get caught up in this. Remember that right now we're trading 49,000 in the Dow. So in the old days, when you'd look at the tote board and say, holy cow, we're off 300 points, that would be big news. I mean, Lou Dobbs and Maria Bartiromo and all the old school financial announcers would be on TV that night going, oh, it was a bloodbath on Wall Street. That's what they would be doing. Now, 300 points really isn't much. These markets are so huge. The breadth and the depth of these things are absolutely astonishing compared to where you were even 10 years ago, 5 years ago. So 300 points isn't really anything. So the first thing I would say is just keep it in perspective. Why was the Dow on a downward spiral? Yeah, you saw some selling pressure, but it wasn't the end of the world. I mean, you got some selling pressure right there on your open, and then you sort of trade. You absolutely flatlined for most of the day, and then you got that big sweep here right before we came on live, and then you're getting the rebound going. For me, this would be one of those trading days where I wouldn't even be interested in trading the Dow 30. Now, of course, you might have had a strategy where you're trading right off the bat a 9 EMA or a 920 on real tight time frames. Nothing wrong with that. If you went with a 30-minute chart and you were trying to trade your orb today, you probably just went short. Not the best trade in the world. Friday, sort of a whipsaw day. Most of your movement came right after that London Open. So really not much going on here. You've traded almost entirely inside of that opening 30 minutes. Is this a good day to be trading the orb? Probably not. It's Friday. What does Friday have to do with it? Are there any market movers out today? Aside from your news cycle, probably not. Is anybody going to want to go home short? Maybe. Maybe not. I think it's high risk. I'd be looking at my orbs Tuesday, Wednesday, Thursday. That's when I'd be looking at those. Right now, though, you have an opportunity maybe at that 50% rule we talked about that you could dial in an entry maybe right around 49.1 to the short. At least that way you could scalp it and you don't have to be sort of in a position trade with about 2.5 hours left in the trading day. That's high stress. You need the market to move, and you need it to move now to get the win, and I just don't see it. I really don't see it. Now, it may crater towards the end of the day. We don't have a crystal ball. If we did, we wouldn't be on live streams. We would be probably smoking cigars on a yacht somewhere down in the Bahamas. But what we do have is we got a set of tools that can keep us safe. We do have that. And as far as I'm concerned, 50% rule of that orb range. If you wanted to take a late day scalp with the prevailing sort of the intraday pressure, I'm not going to call it a trend because it's not, but we'll call it intraday selling pressure. Yeah, I don't have a problem with that. You're not going to get your lunch eaten over the long run doing that. You actually have an opportunity to cash that one in before the market closes too. But let's say you're orbing it right now. You just took your orb sell. And you're saying, okay, well, I've got some great levels, Shane. I got an order block down here that's a potential profit target, and I've got a low. I've got a low area right down there. I mean, we're potentially in the money, except for one problem: the weekends are coming. Yeah, you're running out of time this week to make that trade. Will it work? It may. So to get paid off, let's say at 48.7, we've got to have the market come off another 300 points. So that means the Dow is going to have to close somewhere or at least make a run and be down like about 650 points, somewhere down in there. Do you get that on a Friday? I don't know. That's pretty tough. Pretty tough for me to say. If I was an orb trader, a serious orb trader, and I was building a structured block and tackle strategy, meaning with rules and everything, I would darn sure go through my Fridays. I would probably sort out the news bars, maybe sort out all the NFPs and just look at the other Fridays and take a good look. So there's 52 Fridays in a year. You're probably going to lose, throw out Black Friday and all the NFPs. So that's 13. So that takes you down to about, 39 Fridays? I would check the performance of the orb on those 39 Fridays. See how it looked. If it wasn't worth it, it wasn't worth it. Something to think about there, guys. Good question, though, Eyes. Let me see. Lebo, you won't believe what just happened. A prop firm just halted my account due to inactivity. What? I was testing a strategy. I was going to jump back in when I'd fine-tune the strategy. Was there some fine print in there where you had to be active? I mean, if you had a prop account, you paid, you passed the challenge, you passed the evaluation, and they gave you an account to trade. Were there rules? Was there some rule they added? Said, oh, you have to make X amount of trades? If there was a rule in there, then you just got to go in and buy and sell something real quick and get it going. But if there wasn't a rule and they just halted, that falls under we reserve the right to do whatever we want, and that'll really hurt their reputation. That's interesting. Send me a PM. I'm curious. Let me see. 512 Eli. Early bird gets the worm on Fridays. Yeah, you need to come in and tear it up probably in the first few hours. I really don't think you want to be sitting around trying to go big right now. I really don't. You've only got a couple hours left in the session. 2 hours and 18 minutes. Rome wasn't built in a day. Isn't that the old saying? Let me see. Tina Xing. There are a lot of hidden rules with the prop firms. Man, you could say that again. There are some prop firms that are good, that are pretty good, that'll pay you for your time and really want to reward you. There's some prop firms that basically are just gambling. They get set up. They set a bunch of rules on you that are tough to satisfy. And one of the ones I have problems with is the trailing drawdown. I think it's really difficult to do a lot of different things at once. Meaning, I mean, as a trader, you sort of have a tool belt of trades. You have tools in your belt, and some are scalps. All right, so we've got some scalps that we want to take. We've got some positions we want to take. We have all the different ways to skin a cat, all the different trading types, and they all contribute to our game. That's in our repertoire. That's what we do. Okay, I'm going to scalp here. I'm going to position trade here. I'm going to try to catch a runner here. I'm going to do this. And as soon as you're in the market long enough, you can do all of these things. But what makes it difficult is that trailing drawdown. I was with one prop firm, and I was like, okay, well, I made money. They said, yeah, but your trailing drawdown, well, you violated your trailing drawdown rules. And I go, what the hell are you talking about? I made money. I made money today, and you're penalizing me for making money. So at the end of the day, is get in there, get your 15 ticks or 20 ticks. I don't even remember what my target was that day, but I got it. But my drawdown, because I was trying to catch a big runner and make some real cash, because that's what the market was basically saying it was possible. We had an opportunity to really grab a runner there, and the thing ran up there, and the high water mark of my account pulled way back down off of those highs, but I still walked away with money for the day. And so I said, wait a minute here. I was profitable. They said, yeah, but your trailing drawdown, it went way up and pulled against you. So you went ahead and I violated some rule out there. And I went, well, this isn't for me. Do you have any accounts that just have static drawdowns? So that's the way that I had to approach it. And honestly, I really like trading real money better. I'm not real big on prop firms. Some of them are great, though, and they give you a chance to play. They give you a chance to build up your own cash that you can take out and trade in your own accounts later. That's what they do. And for me, I was looking at it going, well, I might as well just trade my own money, because I know if I traded my own money, I walked out with my $200 and I wasn't sitting here having a stupid argument with some sort of automated risk management system that they had. I said, this is stupid. So I walked away from it. I'll still take a shot at some of those from time to time. A lot of them in the United States will run these specials, deep discount specials. So it'll cost like $30 to take a shot. And typically you pass the first round and then you pay your performance fees and you get in and you start trading. And then you start finding out how bad these rules can really impact not just the way you trade, but your profitability. So I'm not surprised at all, Lebo, that they shut you down for some stupid rule somewhere. Guys, get in there and check those rules out before you get into prop and make sure that they're suited for what you do. That's for sure. Yeah, do both. Absolutely, Tina. It's fantastic. You can do prop and trade your cash accounts. I've done that. If I got a new strategy or something I want to work on, why not use a prop firm's money? At least that way, I mean, you can demo trade too, but if you're on a prop and you're trading your strategy and it turns out to be successful, then at least you get paid for your time. That's what I would look at. Money made, let me see, money made from a prop firm, then put into your own account. I agree. I think everybody's goal should be to trade your own money at some point. Now, a lot of folks in this industry say the first rule of trading is trade someone else's money. Well, I mean, whatever. But if you have your own money for your own accounts, you can trade and make profits there. And you also have an opportunity if you're good enough, word will get out and you will be approached to trade other people's money. You just have to be willing to do that. Personally, I find all of that just carries a lot of strings and things, makes life very complicated. There's a lot of money in it, but it makes life hard and complicated. And, I kind of just like showing up and nailing my targets and going home. I don't know about you guys. It's complete freedom. It's freedom in its truest sense. All right, everybody, I'm sort of looking at our markets right now. We did have another trade idea out, and it did face Bitcoin. This is probably a pretty good place to go ahead and wrap it up for today. But we had Bitcoin. So we have sort of an interesting type of a situation. The trade idea was real simple, just a GDP, Trump speech, and Bitcoin. We had a pullback zone that I really liked, that 78% level. We've been working this monthly sequence for a long time, and I haven't really flipped the Fibonacci's around just yet. We probably could have, but I'm not really interested in getting short these crypto markets just yet. I think that you've got a dovish dollar. You've got an opportunity potentially to get more deregulation. Trump said it again on Wednesday. Crypto capital of the world means deregulation here in the States. Spike low there, spike high, pullback zone. The kill zone's right around 85.5, 85.750, somewhere in there. So this is sort of an interesting trade. We're going to have an opportunity potentially to trade it here relatively soon. Be watching this one over the weekend, that's for sure. But I'm interested in grabbing maybe a little bit from this level. But this is just a trade. We're not trying to pick the bottom of this market. If we do break that 85 and trade down a little bit, then we're going to go to 75. So if the trade doesn't work, and if there's no bidders in there, then you're probably going to have to exit stage left and get out of the market's way, because it's not just going a little bit lower, it's going a lot lower. But the thing that has to happen first is 78% has to get broken right there at about 85.5. You need to see the market actually trade beneath that November low, and then we'll start talking about 75.70, and then we'll be in major corrective territory. Right now, I think most folks that are hodling, that are Bitcoin aficionados, that are long this market, feel pretty good about it. They still feel pretty good about being long. And, if you're long from 17,000, why wouldn't you? Why wouldn't you? All right, everybody, I think we're going to go ahead and wrap it up there. Our Trump watch, is there anything new in the world of Trump? Trump rescinds Canada's invitation to join his board of peace. Trump angers ally with claim that NATO troops. Trump says U.S. big winter storm. I mean, it's just Trump. That's the bottom line. Remember, this is an election year. 2026 is going to be the midterm elections. Most folks at this point, we'll talk about the odds a little bit next week, but most folks believe that the Republicans are probably going to lose control of the House and maybe the Senate. If that does happen, then you'll sort of see a log jam in American politics for the next 2 years. It'll definitely put a damper on the Trump administration's goals and objectives. We'll be dealing with impeachment hearings guaranteed, and everything will sort of grind to a halt. That being said, an election year carries a lot of weight. and there will be things that happen that are going to influence the markets. And a lot of that, we could see a bearish sell-off if it looks like you're going to see those the House and the Senate both go to the Democrats. You could see a market sell-off there. You may see a market rally if the Republicans look like they're going to hold power. It's just there's so much going on right now that politics is going to play a big part of it. And geopolitics, global politics, Russia, Ukraine, that's absolutely huge. We haven't even talked about it. Trilateral talks begin tomorrow, supposedly. That's going to be a blockbuster. I might give you a live news report there if there's any breakthroughs from that engagement. Venezuela, mum's been the word. The coverage of Iran has ground to a halt. The blustering over Greenland, all of a sudden there's a deal in place. So to sit around and say that 2026 is going to be boring is just an outright lie. This is going to be probably the most active year we've ever seen. I mean, aside from like your COVID and your market crash years, this could be top to bottom volatility-wise one of the most accurate years we've ever seen. Not accurate. Well, we've already accurate, but one of the most active years. So how do we deal with it? We stay disciplined. We stick to our strategy. We stay as healthy as we possibly can mentally. A lot of times the physicality plays into your mental health as well. So you've got to do your best to be ready to trade every single day. And I think that if you do those things, you're going to find yourself in a great position come June. Just stay disciplined. Let's have a good first half here. It's been a pretty good 3 weeks. I'm putting together some performance metrics on the trade ideas. I have to be very careful what I do there, though. I can't throw this out because I'm not a signal provider. The trade ideas are actionable trade ideas, and you have to assign your own risk management, and you have to approach them in your own way if you're going to follow them at all. They're just ideas and things that I'm looking at. But our performance has been pretty good. It's been pretty good through the first 3 weeks. We've had a lot of good trades, and we've only had a couple that have gone wrong. And honestly, the ones that have gone wrong have been cheap. So right now on the board, we've got the Dow selling just beneath 50,000. We've got gold selling just beneath 5,000. And if you notice, we've sort of stayed away from the silver shorts. Sometimes a trend is just too strong, and who wants to get involved in a game you're going to lose? I play games I can win. That's my motto. I play games I can win. And when you're in the market long enough, you start to figure out where you can win and where you lose. It's just experience. Stick with it. You'll get there. All right, let's see. He loves that. Let me see. Eyes Hazy. Is 10% profit per day a good target for a $200 account? 10% a $200 account, so it's 10%, 20 bucks. Yeah, there's nothing wrong with 20. Nice little 20 spot. 20 bucks is 20 bucks. So the big thing today is if you could hit that, consistently. So let's do the quick math. So 5 trading days a week, and you're shooting for a 10% profit per day. I don't know what your risk profile looks like. I don't know how much you're allocating to each and every trade. But if you're looking to make 10% a day and you can achieve that 3 days a week, so just a bit over half the time, if you could hit that 60% of the time, what's your payday? $20 a week. It's money. Believe me, it's better to have an extra 20 spot in your pocket than losing 20. That's for sure. It's just all about how much you can hit your profit, eyes, and what exactly you're risking. Now, if it's a 10% profit per day, a good target, and you're only risking 2% going in, then you probably don't have to do much. You don't have to win many trades at all to get that done. It's just about what kind of strategy you have, and if you're picking up runners and big moves or just trying to tick scalp. Tick scalping 10% a day is going to be a little bit tough because your risk is going to be big. Your margin money is going to cut up your entire 200 basically. Something to think about there. Tina, he loves that attention. Fantastic. Eli, stay warm, everyone. Yeah, it's about 8 degrees Fahrenheit here in Dillon, Montana right now. So very cold. Very cold. I got to go to the gym and get good and warmed up before I do anything today because we could definitely run into trouble. Still a little tight from yesterday. Drink that water and stay warm. That's important. Let me see. Tina, I started with 500 and got to 1,800. Just took my capital out now. That's great. 300 in 3 months? No, 4 months? It's a fantastic way to begin. Listen, if you guys are trading small accounts, $200, $100, $50, $500, or if you're trading those numbers, don't let anybody come in and discourage you. I can still remember 7 V-Bar Trading Group, my uncle, the guy that brought me into this game. I can still remember him saying, he goes, Shane, if you can make pennies, you can make dollars. He wanted to see if I could make any money at all consistently. We were trading one contract. It was tough to make any money trading one contract. Let me rephrase. It was tough to make a living trading one contract and scalping the way we were doing. But what he wanted to see is if I could make money. And the lesson was very simple, and the message was very simple. He said, if you can make pennies, you can make dollars. So if you start with a $50 account and you're making $1 a day, don't worry about it. It's just all about scalability, and it's all about applying leverage and increasing your leverage. And your mechanics trading, small micro lots in multiple full lots won't be any different. I mean, the psychology is the big problem you have to get around. The risk element, the risk gets built into your system. The sizing's bigger. That just means there's more money. That's a psychological issue. That's not a physical one. So that's fantastic news. Tina started at 5, got to 1,800. So at what point? Eventually it'll be 5,000, just got to 18,000. And then it'll be 15,000, just got to 45,000. Then it'll be 45 all the way up to 120. I mean, that's how this game works. Start small. You start small, you make pennies, you can make dollars. That's all there is to it. All right, everybody, I'm going to go ahead and sign off. Have a fantastic weekend. Keep an eye on the news cycle. There's a lot going on, and I can't tell you what to do. I'm not a financial advisor. Don't go home short gold or silver. God, whatever you do, don't go home short in silver. You need to think about maybe closing those positions at the end of the day, and then we come back Monday, and if you got to reopen them on Monday, then do it. Absolutely. All right, everybody, have a fantastic weekend. We'll trade the action well, and we'll talk soon. See you.